Should you buy Intel? Well, the number one price point you need to watch is this exact figure right here at the $90 mark. If we reach it and we use it as a support level, then we are probably destined for a rebound. This two figures right here is the 20-day moving average and the 50-day moving average. We are well below them both. As you can see in the past, when you get below these figures, the 20-day, it's typically a good buy. When you get under the 50, moving back in time, it's a good buy. A lot of the times it doesn't hit the 100, but when it does, and it uses it as support. If you look at this figure right here, March 31st, we used it as a support. We went below slightly. Now it's important to understand that yes, you will go below slightly. Here we went around, I'd say 6% below the 100-day moving average. So if we're bringing that here, 6% below, we could expect to see it dip down to the 85 zone before it really uses it as a complete support. You have to understand the institutions and the big players, they are sensing this move. We are heading towards it. They don't want to be, early to the party. And a lot of people ladder their entries. As you've heard me say many, many times, you want to ladder your entries. So what I personally will do is I'm going to enter at 90. I'm going to enter at 88. I'm going to enter at 86. And if we somehow make it down to 84, I'm getting back in even more. Now, if we start declining past that, and I'm sensing that we are going to fill this gap right here, this gap, oh my God. If we end up filling this gap, and what does it mean to fill this gap? That means we're going to the 200-day moving average. We fill this gap, because this gap right here, this is going to tilt up a little bit as we progress with time. And as this tilts forward, we're actually going to be right at that 68 figure, give or take a couple bucks. So if we start to lose the 80, like if we go below 82, I would already exit my position. As you can see here, there is a gap that we could fill also potentially right here at the 85 to the 86 zone. So maybe, just maybe we're going to dip down to the 85, 86 zone. And that is where you get your final full entry. I'd probably wait that just after looking at that gap. I'd probably put that as like maybe 75% of the entry, and then I'd probably ladder in 5% every dollar till we get to that figure right here, this beautiful gap at 84.9, and I'm gonna get out if we break that 80. If we break that 79, I am out of the position, and the only time I'm going to re-enter that position is if we get down here to the 68, meeting the 200-day moving average, and then we are really getting a value buy. We are really getting our money's worth. Now, let's look at what the analysts are all saying. We have a total of how many? It's looking like 14 buys. And, some of them are looking good. Some of them are looking bad. The average target prices, guys, he's crazy, Looking at the average target prices, everyone's has it at the hundreds. We have a couple at the 85. He's saying sell. These are some of the most rated, firms in the world. This is JP Morgan. He's saying sell. 85 is their target price. 85 just happens to be that gap we just talked about 10 seconds ago. So, if we fill that gap, JP Morgan is not wrong, but at that point, you do not sell unless you see it break the 81. Now, let's keep looking at all these. These are all some of the greatest traders in the world, and they are all in the hundreds for their price action. They all believe we have a very, very bullish future ahead of us. Now, coming here, looking at the revenue, every single month we were doing better until 2022. We ended up failing. Now, in 2026, we started off a little bit weaker, and we actually kind of recovered. Now, what is Q3 going to bring us? We will find out very shortly, in a couple months or so. But looking at the typical trajectory, when you look at the past, from Q1 to Q2, we don't typically have that growth. Now, we had that growth this year. So if that growth does continue because of the AI boom, then we will be, destined for a very, very, very good trade. Now, this is the biggest number that nobody's seen on the last one here coming up, is that we have a very big loss. We did have, a good earnings surprise, but the loss is what matters the most. So recapping, the most important things that you need to watch are these two figures right here. We have the $90 support. If we break that and we go down to the 85 to fill that gap, that is when I would enter my position and I would exit it As soon as I see it reaching these figures right here, I would feel a little bit wonky. Maybe we're going to fill this gap. And if we're going to fill this gap, we're going to the 200-day moving average. And if we are, then that becomes an even better buy. Good luck, everybody.